Hi, my name is Eric Loftus, and joining me today is one of the founding partners of Wealth Dimensions and my father, Doug Loftus. As we have conversations with our clients about the current economic landscape, many of the questions we answer revolve around inflation. So today, I thought I would pose a few of these questions to Doug. So Doug, obviously I understand academically the impact of inflation on the economy and can see my grocery bills and gas prices have increased. But people my age have not experienced real inflation in our lifetimes. Can you provide some history and perspective on inflation for us?
Absolutely, Eric, and thank you. So inflation is a relatively new phenomenon for most young people, but inflation's been around at very low levels for the last 25 to 30 years. But if we go back to the 70s and 80s, when actually I was younger, in the 70s, we had double-digit inflation running 10 to 13% in the 73, 74, 75 period. Again, in 1980 and 81, we had inflation running 12 and 13%. And it's interesting, a lot of people think interest rates are always low. When I got my first mortgage back in 1983, the mortgage rate was 14.75% on a 30-year mortgage. So, we're seeing an escalation now from 2% to 3%, 4%, 5%, and everybody's considering these extremely high, but they're not high in a long-term historical terms. So, over the last 25 to 30 years, we've seen low inflation. That's primarily what you've experienced, right? Because over that period of time, we had technological advances, we had productivity gains, and probably most importantly, over the last 30 to 40 years, we've had a globalization of manufacturing where the price of goods came down because we were moving the cost lower and lower and lower. That's been a big political conversation in the United States because we offshored a lot of jobs to China, we went to India, we went to Mexico, and as the cost came down of producing goods, so did the ultimate price of goods. That's maintained a cap on inflation for quite some time.
So with that, what are some of the biggest impacts of inflation on people's lives?
Well, inflation does insidious damage to a long-term financial plan by regularly increasing costs over decades. And inflation is virtually always present. It's just a matter of at what level. Periods of high inflation are actually as damaging or more damaging than periodic declines in the markets. Costs that go up rarely go down. Doubt that your grocery costs are going to go down. Costs of housing may go up and down periodically, but those rising expenses require larger capital balances to maintain your lifestyle throughout your lifetime and into retirement.
So what have been some of the biggest drivers of this current round of inflation?
This is an interesting time because in the past, you usually have a coincidental rise in energy costs. Back in 73 and 74, for instance, energy costs were rising so quickly that when I was in high school, the junior high students came to the high school half the day, and the high school students went the other half the day so that the school district could close one building and not have to heat it. Okay, so energy was a big component, and certainly is a component now. But I would say that probably the biggest impact in the near term has been COVID. With COVID disrupting the supply chains around the world, it's had a major impact. As we said earlier, supply and demand are really what causes inflation. When the demand exceeds supply, and as we've seen tremendous disruption in the global supply chain, goods have been difficult to come across. It's been difficult to get things out of the port. China has taken a very aggressive approach, a different approach in the United States. They have to date largely not utilized vaccination, but they've just shut complete cities down at one time, and all the manufacturing, all the businesses, which then disrupts a very just-in-time inventory manufacturing system. So that's probably been the biggest impact. In addition to that, obviously with Russia invading Ukraine, has been a significant disruption in the energy markets. And with the Russia recently, or in the process of potentially cutting off natural gas in its entirety from Europe, we may still see some impact. And we're seeing oil prices at fairly long-term highs. We did see oil in 2008 and 2009 actually early 2008 go to $150 a barrel before dropping to 25. So there is a lot of volatility there. We've seen oil prices above 100. We all know that when we fill up our tank, where it was costing us 35 or 40 bucks, it's now costing us 90 bucks to fill a gas tank. And that is having an impact. It also is having an effect on people's consumption. When you have to put that money in your gas tank, you can't spend it other places. The other contributors, Federal Reserve, low interest rates coming out of the financial crisis in 08 and 09. They've essentially kept interest rates at zero for 10 years. We started to go up in 2018 in the fourth quarter, and we had the market sold off very quickly, 25% in late 2018, and they backed off. They then started lowering interest rates, and then COVID hit, they went back to zero. And that's had a profound impact. When companies could borrow money at below zero rates in Europe in 2020, that had a massive impact on investment. Our financial system and our economic models are not equipped to have someone pay you to borrow money from them. But that's what was happening throughout Europe, especially in Germany, where if you bought a $100,000 German government bond, 10 years later, they would pay you back about $90,000, and you got no interest along the way. So that also led to it. The Fed has also increased their balance sheet from about $700 million in 2007 to almost $9 trillion as of the end of 2021. Putting that much money in the money supply has also had a profound impact. And then the final component of that is through COVID, we had a massive amount of stimulus, both on the individual level as well as the business community. And we put several $1 trillion into the economy. Now, that helped out a lot of people, it helped out a lot of businesses, but the method it was done was more like using a sledgehammer than a framing hammer. It was done just money was thrown into the system, and now they're frantically trying to get that money back out.
Great. Well, so we've seen the Fed raising interest rates, as you just mentioned. Any thoughts on what they or the government can do to combat inflation?
Well, yeah. So what the Fed is doing currently is they're trying to suck money back out of the economy, right? And the Fed can really only do one thing, and that is to blunt demand, right? It's a supply and demand issue. So the Fed is raising interest rates, number one. We've seen them move up aggressively, and they've indicated they're going to continue to do that, and that blunts demand, right? The cost of funds is higher, costs more to get a mortgage. It costs businesses more to borrow, therefore they're a little less prone to borrow money, slows the economy. But by blunting demand, they're slowing the economy down. And that is when markets tend to struggle to some extent.
So how do you recommend people plan for and address inflation as it impacts their everyday and financial futures?
Yeah, that's a really important question. And it's actually quite simple. You have to address inflation by planning ahead and understanding the risks, that the risks are substantial, and don't simply ignore it. This issue is a big concern, especially for retirees and those on a fixed income. They'll likely experience longer retirement than any other generation in history. They need to guard against the insidious damage done by regularly increasing prices. When they go up, they rarely come down. When prices go up, it requires larger capital balances in order to maintain your lifestyle. This underscores the importance of clearly understanding your lifestyle and what it costs to maintain your lifestyle, doing that in a detailed way and reviewing and updating your financial plan regularly, because it will help to reflect on any adjustments that you need to make during the course of retirement.
Thanks, Doug, for lending your perspective on inflation and your years of wisdom. We're having active conversations with all of our clients as we update their financial plans and reflect the impact of the latest inflation numbers. If you have any questions on how this might affect your personal circumstances and want to craft a plan, please reach out to any of our financial advisors on our team, and we're happy to help.